To get a better handle on your personal finances, you should really look into embracing the concepts of budgeting and net worth. Those two concepts are so important to helping you track and improve your overall financial picture. Much like a business has a balance sheet and an income statement, calculating your net worth effectively gives you a perspective on your own personal balance sheet, while creating a budget basically creates a personal income statement that is used to track your income and your expenses. So Chapter 4 of our book, Next Gen Dollars and Cents, really takes you through the process of how to figure out your own net worth and your own personal budget. Net worth, you see, is a measure of your overall financial health. It really represents the difference between your assets versus your liabilities. Effectively, it's what you own, your assets, minus what you owe, your liabilities. And calculating your net worth, at least on an annual basis, is sort of our general recommendation. And that allows you to sort of track it from year to year, which really helps to show the progress that you're making towards achieving your financial goals. So how do you calculate your own net worth? Well, the first step that we talk about in our book, Next Gen Dollars and Cents, is to take a sheet and list all of the assets that you have. So these would include your cash, your investment accounts, your retirement accounts, real estate, any type of business interest that you might have. So once you've got that list of your assets done, then you would turn to listing out your liabilities. So this would include things like your mortgage, your car loans, your credit card debt, and what the outstanding balance is at that particular date on those various forms of debt. Lastly, it's the math part of calculating your net worth. So you've got your list of assets that you've totaled up. You've got your list of liabilities that you've totaled up. And it's assets and subtract liabilities, and that creates what your net worth is. So for example, if you had 500,000 of assets, 300,000 of liabilities, 500,000 minus 300,000 tells us that you have a net worth of $200,000. So the book itself has a QR code in it that links you to a downloadable worksheet that you can actually edit and save and use that as a way to keep track of what your personal net worth is. So a great resource as well that our book directs you to in the form of that downloadable and editable net worth worksheet. The book also gets into some details of certain different types of net worth. Negative net worth, for example, is one you probably want to stay clear of, because that means that your debts are greater than your assets. The one that perhaps you want to strive for is high net worth. That means that your assets are quite a bit more than your liabilities. Often folks that are millionaires that qualify for that sort of status have assets greater than liabilities by a function of over $1 million, putting you into that sort of high net worth category. So important to kind of know the differences between different types of net worth. And at the end of the day, why net worth really matters is it does help you to make better financial decisions, and certainly tracking it can also help you see how your financial situation is changing, and hopefully it's improving and not getting worse over time. So that's sort of the net worth or balance sheet for individuals portion. Next up is the income statement, otherwise known as budgeting. And simply put, budgeting is the process of creating a plan for your income and your expenses, which allows you to make much more informed decisions about your overall money. So Budgeting is certainly important for a host of reasons. Among them, in the book, we talk about it providing a clear picture of your financial situation, helping you to improve your spending habits. But the best way to create a budget is really getting down to this notion of tracking what's coming in versus what's going out. And there's no real right or wrong way for you to sort of keep track of that or create your budget. But the bottom line is that you just need to track all of that money in versus money out. The book gives a variety of sort of general principles to help you start to effectively create and track all of your income and expenses using your own budget. Obviously, it starts with income, right? That's the first thing that you have to get a handle on for creating a budget. How much money is coming in each and every month sort of starts with there. Next, then you would list out your monthly expenses. What we encourage you to do is to categorize those as either fixed or variable. Fixed expenses are usually those that don't really change from month to month, and they're sort of the backbone of what you need to pay each and every month, whereby variable expenses can change every month based on circumstances or behavior. Usually variable expenses offer more opportunities to sort of adjust or reprioritize how you're spending your money. So once you've done that, kind of listed your income, listed your expenses, then the next step to create an effective budget is to look at categorizing the expenses and understanding the difference between needs versus wants, right? Needs are essential expenses that you must pay no matter what, while wants are sort of those discretionary expenses that you might be able to live without. So certainly from there, as you go through the process of tracking your expenses, that mere act of tracking those expenses for a few months often helps people get a better picture on what actually is happening as they spend money. Last and probably most importantly, adjust your budget as needed. Look, a budget is never intended to be a static document. It really should be a dynamic document that is changing and adjusting as you go through this exercise, because the point of the exercise is to give you insight into what exactly is going on with your own personal expenses. That's why Chapter 4 of our book, Next Gen Dollars and Cents, also includes a QR code that allows you to download and edit and save your own personal budget tracker. That's available in the book, courtesy of that QR code that links you over to that, ultimately getting into a worksheet that you can work with. Our book also includes a variety of tips for budgeting, things like observing the 50-30-20 rule. That's sort of a general rule of thumb that suggests that you take 50% of your income, put that towards necessities, 30% of your income then is discretionary spending, and then the last 20% is for saving. Another tip that we make in the book is the notion of starting gradually, right? Oftentimes it can just be overwhelming if you're looking at all of those different expenses that you're ultimately having in your own personal life. We talk about breaking it down into different pieces. Maybe starting out with budgeting, just looking at your grocery bill or something like that. The notion of starting gradually ultimately helps you get through the entire process of tracking all of your expenses with your budget. We also mentioned the importance of paying for things with cash. That's a great way to avoid overspending. The mere act has been shown by a variety of research to actually increase. That mere act of using physical cash has actually been shown to increase the chances that you'll think twice about whether you need to make a particular purchase with those dollars. Chapter 4 also includes some of the common budgeting mistakes that you want to avoid. And in addition, Chapter 4 of our book, Next Gen Dollars and Cents, concludes with a sort of a discussion about the importance of an emergency saving fund, because that is really something that's available to use as your own personal financial safety net that ultimately provides stability in the event of unexpected emergencies, lose your job, something like that, then that's why it is essential to create one and to have one. Ultimately, to effectively build your own emergency fund, it really helps to break it down into smaller, manageable pieces in order to achieve that. For example, if your goal is to have $6,000 in an emergency fund, then break it down into increments of $500 a month. And over the course of a 12-month period, then you'll be able to accumulate $6,000 in that emergency fund. Another great sort of tip or trick to making an emergency savings fund possible is to really make those contributions or that savings to the emergency fund on an automatic basis. Set up those recurring transfers from your checking account over to a savings account and the like to help really effectively make that transition and creation of an emergency fund ultimately work for you. So for more information about how to get on a better financial path by calculating your net worth, setting up a budget, and creating your own emergency savings account, make sure you read Chapter 4 of Next Gen Dollars and Cents. You can get your free copy of our book by texting free copy to 407-791-0070. That's 407-791-0070. My name is Joel Garris. I'm a certified financial planner and certified financial fiduciary at Nelson Financial Planning and author of Next Gen Dollars and Cents. Thanks for watching this video.